you compare that all-in sustaining cost to a gold price in Aussie dollars of in excess of $5,000, the margin there, the size of that margin of over 100% is self-evident. So we think that volume at that cost is hugely attractive.
Hello, you're watching Proactive. Joining me is Greatland Gold CEO Shaun Day. Shaun, very good to speak with you. Could you start by summarizing the highlights from Greatland's March quarter, please?
Thanks, Stephen. Appreciate you having me on the program. It was, a really good quarter for us, a lovely set of numbers, and the first time we've really had an opportunity to daylight what Telfer can do to the market. I think the headline for me is the $253 million of free cash flow generation, and that's given us a bank balance of 398 million Australian dollars with no debt. I think that's just a remarkable outcome after 4 months of ownership. We achieved 90,000 or over 90,000 ounces of gold plus copper for the quarter, so a really good production profile, over 20% larger than our original indications to the market. And of course, the costs were also lower, just low 2,100 all-in sustaining cost. I think that's a very good outcome, again, beating the market expectations, beating our own forecast to commence production at Telfer. So all of these things, coupled with a good gold price, delivered that super strong cash flow. So great set of numbers, as I said, and super grateful for the team here at Greatland, and particularly the site team. Integrations are hard, and we've done all this whilst continuing the integration of Telfer Havieron under Greatland ownership. So we think a remarkable outcome.
Outside of production and cash flow, what were some of the other key activities or milestones for the quarter?
Look, this is all about Greatland revitalising Telfer. So investing in productivity, investing in the drill bit to drive that medium to long term outperformance. So what you've seen is we've actually tripled the number of rigs on site. We're now up to 6. I don't think it's been this high for at least the last 5 years, and we'll continue to look forward to further opportunities to increase the number of rigs at site, but also just the further investment. You've seen us in the open pit at West Dome approve the commencement of the big stage 7 cutback, so that's great. Straight into ore there, which is perfect. In the underground, you've seen us drive out to that West Dome. We had underground. We had that first announcement of these really high, wide intercepts in that West Dome underground, and we've commissioned the second decline out there. That will give us an additional platform for drill drive, and drilling, but also it will allow us to go straight into mining at some stage if that's where this takes us. So, but it shows a level of conviction that we want to go out with that second decline into the West Dome underground. It looks really exciting for us.
I see you've provided guidance for the first time. Can you summarize this, please?
Yeah, look, we just wanted to share kind of what we thought we could do for this financial year. So it's really the 7 months of the June 2025 financial year. It's that 196 to 210,000 ounces, and the all-in sustaining cost of 2,100 up to as high as 2,250. Again, though, you compare that all-in sustaining cost to a gold price in Aussie dollars of in excess of $5,000, the margin there, the size of that margin of over 100% is self-evident. So we think that volume at that cost is hugely attractive.
You've also formally kicked off the ASX listing process. Could you recap the rationale and some of the key processes and timelines, please?
Yeah, Stephen, look, we want to undertake this cross-listing. Importantly, we'll be adding an ASX listing and retaining the London AIM listing. This should bring us more research, and you've seen that already with Macquarie Bank and Argonaut here in Australia. Both commence initiation of research on us. We thought that was really positive in the lead up to this announcement. and I suspect there will be more to come as we progress that ASX listing. In addition to that, we have the scheme meeting up in London that will take place on the 12th of May. I'll get up to London the week before and hope to meet with a number of shareholders, both retail in a town hall type format, but also institutional. And ultimately, that will need approval by shareholders. We'll update the name to Greatland Resources Limited as part of that, and then we'll be listed both on Australia and in London very late June. So we'll effectively square away that listing this quarter, which we think brings in a whole new range of institutional investors for us, particularly those Australian investors that are mandate locked to Australia. It will increase our profile, but also will participate in indexation often for the first time. So I think all these things are we think, positive and just new pockets of demand for our shares to augment what the support we already enjoy.
Sean, I hope you'll keep us updated on progress as you move towards that listing. Thank you very much for speaking with us today.
Stephen, thanks very much for your time.
That's Greatland Gold CEO Sean Day.